Todd is going to stay that way for how long?
For a lot of minutes.
Go get it. I'm on. All right. Good afternoon, everyone. As Todd leaves the room, that's right, Todd, I just threw you under the bus. Todd's got an alarm running in the another room, and it's going to be loud, so he's turning it off now. Welcome to our May Hot Stock panel. Todd's had enough already. Welcome to our May Hot Stock panel. My name is Glenn E. Tompkins Jr., Esquire, DDS, and no, I'm not a real dentist. I'm glad to be here, glad to have you all here. If you can hear us and see us, by all means, please respond in the chat to let us know that everything is working well. And because everyone can see everybody's chat, be mindful of that. Jay, be good. I have to put that out there. Jay, make sure you don't show up and show out in front of company. All right. So with that, that's right, Jay. Joey, why did you tell him? All right. So we can see the chat. We can see the chat, and from time to time, we will respond to it as we can. We're going to try very hard this week, folks, to finish within 1 hour. All right. I'm setting the precedent today. We are going to start and try to finish in 1 hour. And Saborium, mug is not ready yet. Don't say it yet. All right. VectorVest. If you're new to the VectorVest software, the VectorVest program has been around for 30 years, over 30 years, with the purpose of helping to make our subscribers better investors in the market. It's got a lot of flexibility, some of which we'll talk about today, but primarily we're going to be talking about good bargain, big bargain stocks to take advantage of. What is the word I'm looking for? Blue chip bargains. There we go. Ideally for the longer term investor, this hot stock panel is going to be tailored toward you. Our hot stock panel, every month we have one, and every month we have a different theme, whether it's for bottom fishing, whether it's for swing trading, whatever it is. But this is the place to be if you're looking for ideas, and every month we come up with 10 ideas. You get to hear from 4 different top level, as Joey says, top level instructors to help you to make some decisions on those. Today, I have, along with myself, Jim Penna, the manager of the Ultimate Retirement, or retirement in and of itself. I have Patrick France, who is a senior instructor here at VectorVest, and Todd Schaefer, who happens to be one of my best friends and my buddy. He is the manager of research. Now, Jim is looking over there. Jim, you're a good friend. Patrick, you're just an acquaintance. But
that's fine.
I just put that out there. And
I'm not your acquaintance, pal.
In the background, we have Joey. Say hi, Joey.
Hi, Joey.
He's our producer. He's with me on Trending Thursdays every Thursday in the background to help me to look good. All right. And don't forget, if you're new to the channel, please subscribe to the channel. We'd love to have your subscription. We are, who's the best golfer in the room? Really, Jake? Really, Jake. All right, that's all right. Don't get the golf going.
VectorVest champ 4 times in a row.
We just played Saturday.
And actually, Jim was with us with Steve on playing golf, so that's all right.
Glenn knows.
Whatever. Don't start either. All right. So today we will have a giveaway of a mug. Now is the time. We're going to give it away. The cutoff time is for 2:45. Type mug in the room, and someone who types mug in the room will earn themselves a free mug. See these mugs right here? These VectorVest mugs? You're going to get one of these for free. So type mug in the room. We will see who does that, and one of you will win a VectorVest mug. All right. So this week or this month, we're going to start off a little differently because we are looking at long-term stocks. I think the highlight of the afternoon should be placed on our manager of retirement. He is going to take the forefront in this week's or this month's presentation. And just to let you know, at about 2:35, 2:40, I will have to vacate the room because I have another webcast that I have to do at 3 o'clock. So with that being said, I'm going to start off with Jim. Jim's going to introduce himself, and then when he's done, he's going to pass it back to me, and we'll keep this going. Take it away, Jim.
Thank you, Glenn. Thank you, Glenn. Thank you all for taking the time to be here. Again, for those who may be new, my name is Jim Penna. I am the manager of retirement services here at VectorVest. Been here for about 14 years now. And prior to that, I'm, as a lot of you know, I'm from the Connecticut, New York area. Worked on a trading desk as a market maker for a long time, and even prior to that, I was a police officer in Norwalk, Connecticut for just about 10 years. So for those who are new, that's my background. What I wanted to talk a little bit about before we get started with our stocks is, again, the concept or the setup of what we're trying to do today. We decided that the concept would be more of, Glenn used long-term stocks, and we can look at them that way, but really it's more of a blue chip type of stock. Now listen, you can day trade blue chip stocks. It doesn't have to be a $2 unknown stocks to day trade. That's not what we're going to talk about here today, but just so you know, we're looking at good quality blue chip stocks from a list of searches. So again, as kind of a setup, we're going to get into a watch list that was created, and I just want to make sure I get the searches right. We used ruler stocks, premier growth stocks. We used the search worry-free winners with no moving average. That's for people who don't have ProTrader, just so it's a built-in search for you. And also we used, did I say premier growth stocks?
Yeah.
And we took the top 10 from a watch list called Blue Chip Bargains. And we created a master watch list, and then the four of us each went through that watch list, and we picked a few stocks each to kind of analyze and go through today. The great thing about the watch list that's going to come up, it's from a search or a series of searches that are all quality searches. I don't know that there's a stock on the list that I wouldn't consider at some point owning or doing some type of option trade on. So it's a great list of stocks, a great master watch list, and I just wanted to begin by kind of setting up, because it's a little different than the way we've done things in the past. Again, the idea being good quality, high relative safety stocks. And as far as the retirement-minded side, as you guys know, we haven't made it to that confirmed call yet, to the upside. We almost got there. I think it was April 29th. We almost got there. The buy-sell ratio tried very hard to get up above 1, but it just couldn't. And this is the reason why we wait for the confirmed up call for that most sustained uptrend before we get into our retirement stocks. So I just wanted to take a second to set that up for us. And then I'll go ahead and begin, Glenn, I guess. We'll
Yes.
take my stocks first. All right, what we'll do is we'll go in to the watch list that I was talking about, and that would be here in the Viewers tab. I'm going to break this down so we have some extra room. And what you see here is a list of 36 different stocks. So one of the great things about this is we took the top 10 stocks from 4 different searches, and we still have 36 individual stocks, which means there was only overlap for 4 of these searches, which I thought was pretty good. So we then highlighted, before we got started, the stocks that we want to kind of analyze each. And I think when I right click, will I unhighlight them? Well, we're going to find out. So I'm going to walk through my 3 stocks first. We'll put them up on a graph, and we'll take a look, and we'll all kind of comment on them. I'm going to start with Cigna. It is down today. Cigna is near the top of the list. We currently have these, how do we have these sorted? Oh, by symbol.
By symbol.
Okay.
You can sort it however way you want it.
We'll sort it, well,
Relative
we'll start
safety is
with
good enough, yeah.
RS. So we'll start the sort by relative safety. ODFL, I did uncheck them all. That's what happens. That's right. We know which ones we want. The graph should still be there, though.
Yeah, at the top. Yeah.
So I'll start with we'll go back to symbol then. So I'll start with Cigna. This was my first choice. It is down today. Just going over the preliminary walkthrough that you would do on any stock is bring it up into your watch list or into your viewers tab. Relative value and safety, obviously fundamentally sound company. Relative timing is very strong. And the comfort index over time has been pretty good. But here's what I talk about all the time on the high RS stocks is what we're looking at. When you see numbers like this in relative safety, generally speaking, there are exceptions, but not many. All of the other numbers we care about are going to fall into place. So with a relative value at 158, RT, of course, can fluctuate depending on the market. Earnings growth rate at 26% earnings growth rate, and that's percentage per year. So a very strong stock. So the preliminary look at it is clear that it is a blue chip bargain, if you will. If I slide over to the right here, the next thing I want to make sure is that I'm in an industry or a sector that I can analyze and get a good sense of where that sector is. Now, healthcare industry, talk about that as we go through. I think there's a couple of healthcare stocks coming up. This one happens to be healthcare HMO. So if we'll scroll back. If I go to the home page, one of the ways that I went through this list to pick the stocks that I wanted to do was going at the top RT industries. So if you look up here, the second ranked industry in real time is healthcare HMO right now. Now it has ticked down a little bit today, but I know I've got a stock, a rising stock and a rising industry to start with. So that's where we want to begin. We're going to have to do this separate because we lost, I think, all of the graphs.
Oh, it might be put down. What's the word I'm looking for?
Minimized?
Minimized.
Detached?
Go down to the bottom. There you are.
There we go. Okay, great. Thank you. So I'd have to go back, though. I still don't have CI.
You can scroll up or down.
There we go. Forgive me, folks. The lighting in here, it's very hard for me to see the screen, so I am getting old. All right, so we'll start with Cigna. So the way we've got it, and everyone will set up how they want to set up their screens here, but we'll start, because these are blue chip, high RS stocks, I'll start at the subgraph here for earnings per share, and we can see on a one-year graph the strong earnings and earnings forecast that we see. Positive, these are very strong earnings that Cigna has had. If we look at a graph, as you well know, I don't think you'll find a graph that doesn't have this type of drawdown from late February to, I can't see, but I'm guessing that's March 23rd or very close to it.
March 18th.
March 23rd was the day that the market bottomed, right? The overall market bottomed on March 23rd. So most graphs we look at are going to look like that. Now, since then, you know, the market has fought its way back. We haven't necessarily had that V-shaped correction that we might like to see, although it looked like we wanted to, but now the market and the stocks, as you can see, are kind of moving sideways. So what we have is a stock right around support resistance here. I'm really not looking too closely at that on this particular stock. What I'm looking at is the industry, the current conditions in the current market that we're looking at. So healthcare sectors and industries has been something that I've been looking at. And so Cigna made the list here for these type of stocks for what I'm looking at. Again, the graph, it is a buy-rated stock, I believe, at this point. Down a little bit today. Above its is that a 50-day moving average?
50-day EMA.
And we do have support at whatever that number says that I cannot see. So that's a stock, that's a blue chip bargain in an industry that is number 2 out of what, 221 industries currently. Not that we're looking for dividend payers here, but I believe the stock also does pay a dividend. And that's my first pick, is Cigna, based on those factors. So, Glenn?
All right.
You want
So
to comment?
the thing I like about the stock is that it's in a rising industry. That's huge. All right. The graph may not look all that pretty right now, but the power of an industry, Todd does this a lot. The power of an industry can be very pertinent for an individual stock. And if the industry is rising, why? Because the stocks within the industry are rising. So I'm thinking that the rising industry will be really good for this stock. As far as getting in, I'd like to see it break above that most recent level of resistance, let it get out of its own way, then challenge going up to the high. The stock is a buy. It is above the 50-day. Earnings looks good. You always want to buy into a stock that has, let me ask you a question, that has rising earnings. So it's pulled back a little bit, but really leveled out. That's what I like. I like that it's in a good industry or a rising industry. I'd like to see it take out that most recent level of resistance. Patrick? Or Todd, sorry, then Patrick.
Yeah, I like the industry sector play. In fact, I have a pick from the same industry because it is hot. Just about all of these stocks have done this consolidation with the market. I like how this is holding the 50-day, and the support level right below it gives me a nice little safety valve And I'm kind of waiting, like you, Glenn, I'm waiting for the breakout. Let's see what the market does also, right? We're in this little consolidation on the market as well. So if both break, then that's my entry and living large.
Yeah, just real quick, one thing I did fail to mention, and Todd's right, you got to have the market aligned as well. And I didn't really get into that, but before you buy any of these, you have to feel comfortable with where the market's going. In retirement, we use the confirmed call as our entry levels for all of our portfolios. So Todd makes a great point that I missed and just wanted to reiterate that. Patrick?
So once again, really need to wait for that breakout above 200. Get some follow through with it for a good consistent long-term entry point. One thing that I didn't like with it was the flattening of earnings. They were going up for so long till beginning of the year. Then since that point, they've dropped a little bit, if not just moved sideways. Now, granted, it's a good company, still making money, but I'd like to see earnings still continuing to rise the way it was before.
That's got big earnings, though.
Yeah. I mean, yeah, the company's still making money, and they're expected to make money, but it just kind of is a cause of concern or something to keep an eye on as if you're into this stock, to keep an eye on as you move forward.
Yeah, you're still within 10% of that high, but if you started having a dramatic pullback, then I'm right with you. Right? They seem to have stabilized. Let's see how we do in the new economy.
Yeah.
Well, the entry point to me and to both of your points is this isn't a swing trade, so I'm not waiting till it gets to 201 to purchase it. I do understand the essence of the buy stop and waiting till it breaks resistance. If I was swing trading it, I would certainly probably do that. I'm looking more, again, it depends what your objective is. If you are short-term trading this, yes, you'd want it rising in price, probably just hitting a new high, maybe day over day or whatever it might be. But the goal really isn't looking, I'm not going to wait till 201 to get into this stock, I guess is my point.
Well, the only reason I say that, though, is because from a longer-term outlook, you're at a lower high since the high back around the middle of February. And, the unknowns in the market and unknowns in jobless claims and all the stuff going on.
Well, right, we could say that about any stock we talk about buying. So that's kind of the overview.
That's why I'm looking at a solid number to make sure I'm still hitting higher highs. I'm not reaching a level of resistance at 200 and then start to make a second dip. Mm-hmm. So that's why I say wait for the breakout.
Yeah, I think you're both making good points in that on the entry, I may play a faster kind of trader's entry to make sure that the short term is driving, and supporting the long-term trend. But I'm not am I going to put a stop in at the prior pivot or support? No, it's a longer-term hold. I'm going to give this thing more room to play. Maybe I'll even build the position instead of going all in. Right? It's a different kind of approach.
All right.
Yeah, okay, great. So let's scroll down. My next stock was going to be DocuSign. So I don't think we'll have any complaints about the technical views of this and the price movement of this one, so we'll leave that part out. And DocuSign is just based, again, software business was one of the higher ranked industries. I like the industry, I like the movement of the stock. Again, from a technical standpoint, relative safety. Now, here's a little different. Here's one of the exceptions from the searches that we picked up on. Honestly, I'm not sure exactly which search DocuSign came in on, but this is one of the rare stocks that you'll see me talk about, and if you look at the relative safety number, it is actually very low. However, the earnings growth rate on the stock,
I think you have to add it.
I'm just sorry, I just can't see the screen. There it is. So the earnings growth rate on the stock is 47%. That's the earnings. That's earnings growth in percent per year. So that's another reason. So that's more of a technical look. Buy rated stock, highly ranked industry. So that was that pick from our list of 36. So not a lot of thought went into that one. Just looking at a nice graph and a huge earnings growth rate.
I'm with you on that. We always hear that the graph is the dinner behind the stock. Oh, it's the DMA. Oh, okay, never mind. That the graph is the dinner. I'm
Okay,
always
buys
hungry.
dinner.
I'm hungry. Anyway, we just came from Chick-fil-A too. That the stock graph is the DMA of the stock. That's telling a beautiful story. It's moving, it had some hard time getting out of bed for the first 3 months or so, but since then, riding that 50-day moving average. Of course, we know when coronavirus hit, the stock hit. But this is one of the more resilient stocks in the database that didn't seem to get hit nearly as hard, and the stock getting a sell recommendation was just for a small amount of time before it was resilient. I bet you CI on this stock is probably really darn good. That stock's price has just been rising, got back above, challenged that level of the moving average, went back up, now hitting a new high over the last year.
Yeah.
I like everything about it. There's the CI. CI is at 1.68. But the graph told me that without even having to look at that. The graph told me that without even having to look at that. I love it. Todd?
Yeah, you're almost in trader's world here, aren't you? It's a nice, pretty price pattern. I like how we went from loss into gain in fall of 2019. Hanging on for the market correction here, right? Still hanging on to some earnings. They seem to be plateauing here. And the market still likes them, obviously, right? Coming up sharply off of that low. So there's lots to like there. I'd be in particular for the longer term hold, maybe look at sales growth, make sure I have some top line performance. But other than that, that's an easy entry. Maybe getting a little overextended at this point.
I was just going to say, I know you can make the argument, right, it's too far away from that moving average. So where's the right time? Again, these are choices not made with that swing trading mentality here. Just a good quality graph pattern over a 1 year. Earnings are rising. And again, I don't want to say it on every single stock, but it's the market trend. It's your bias on the overall market that's going to determine when you actually enter in. My recommendation, unless you are swing trading, is to wait for a confirmed up.
Yep.
And make sure you've got prudent stops in once you're in.
Patrick?
I like it. Nice steady pattern, bottom left to upper right, both on price and earnings. I like the fact that how resilient it was through the pullback in the market. Yeah, I mean, technical and fundamental both look good on this one. So, yeah.
Yeah, I like it for a covered call trade too.
Okay.
If I just wanted an income trade. Okay, great. Let me get through this because I got one more, and it is. Where are you?
I don't know.
Maybe.
You got the mouse.
Of course, it's at the top, right?
Is it at the top?
It's gotta be.
Way to go, Jim.
There it is. So another one. This one is
Repligen.
Repligen, RGEN, not to be confused with what is it? Regeneron,
Regeneron.
REGN. But it is a biotech stock. Again, from clearly on the graph pattern since the low. I'm ignoring all of this because, as I said already, every stock's got this. But we've got new highs. Again, from a point of view of from a technical standpoint and from a fundamental standpoint, you've got a stock with a relative safety. Well, first of all, CI is very strong. Relative safety is, what is it?
1.42.
1.42, which you don't see often. The other great stock on that list was Vertex. Could have easily chosen Vertex over this one. Both are very high relative safety stocks, which you don't always see on these type of biotech stocks. So I thought a great stock here. And also, I don't want to lose the screen, also I believe in a top industry here as well. So this one was another kind of easy choice from a technical view and from a fundamental view and from what the current environment is on biotech stocks. So again, a pretty easy one to choose from that list. I said it earlier, I can qualify. I can make an argument for all 36 stocks on that list to put into a portfolio, assuming we enter at the right time. And in my opinion, right now is not the right time to enter into these.
All right, real quick before Patrick goes. 1, 2, 3 strings. 1, are you a subscriber to the software? And if you are, we give information on how we look at relative safety. Relative safety looks at the consistency and predictability of a company's financial performance. Now, you may or may not agree with the picks. That is your decision. But the software has been around for over 30 years. We've been helping our customers make money for over 30 years. These indicators, these proprietary indicators, have been working for over 30 years. That indicator looks at the consistency and predictability of a company's financial performance, but bigger than that, it's looking at how risky the stock is. So we do disclose what needs to be disclosed as far as we can without giving away the proprietary factors. All right, so again, it's a very good, well-based indicator that works out extremely well for people who are looking for stocks for the long term. All right, Patrick.
So with this one, isn't this one the biotech company that has something to do with the coronavirus vaccine or
I think
treatment
that
for it?
might be Regeneron.
I think that's REGN.
Yeah,
Okay.
I think it's the other one.
Yeah, I mean, earnings look good. Getting a breakout to a new high today. Today maybe a little early, but if it can hold those highs, that's a strong sign that people are still willing to pay that price for it. So, yeah, I like it from a technical standpoint, and you have a nice steady rise on the graph, nice steady rise in earnings. So, yeah.
Wow. All right, am I yelling? Sorry if I'm yelling.
The whole tone of voice changed. Kind of weird. Right?
Listen, if I'm yelling, get over it. All right? You know me, I'm going to do what I do, and that's what I do.
Those are my three stocks. I'm going to pass it over. I did have an honorable mention. ODFL, totally different industry sector. ODFL was on that list. Looked great as well. That's my honorable mention. And John said hello from Norwalk, Connecticut. John, it's scrolled through, but hometown, go Senators.
Oh, well, whatever.
Yeah.
I almost picked
What?
ODFL.
Did you talk about that stock? Why did I just go straight to
The one thing I noticed is it's done this pattern a couple times, if you look at it, where it gets overextended, has a sharp pullback into the low, and then it's done that twice on this graph, and maybe setting up for a third one, which may be okay if this is your long-term play. Accommodate that, right? So
The only thing I would say is
Have a loose stop.
I'm not going to put a technical label on this because that's February to March. So every stock has done that for that one. So yes, it did do it here. I'm going to give it a pass on that one.
yeah, my point isn't that I'm not going to trade it. My point is I'm going to accommodate that
Who's next?
moving into the future.
All right, great.
right.
Those are my stocks. Thank you.
I'm going to add one last thing. When's the last time you've seen a drug biomedical stock have a graph like that? Keep that in mind. All right? I moved the mic away. I'm going to stop yelling. Everybody's yelling at me. Listen, get over it. All right? That's all I got to say. Y'all just listen. All right. With that being said, I did move my mic down. Hopefully that makes sense. Hopefully. All right. Hopefully. All right. So the reason why I'm going now is because after I finish giving you my stocks, I do have to run because I have another webcast to do at 3 p.m. All right. So I wanted Jim to set the table because he is the retirement guy in our department. I wanted him to set the table. Thank you for doing that, to explain where that main watch list of 36 stocks came from, and then we as a team picked our own stocks from that list. I think you can't go wrong with that list. And someone asked, is that list in your software? The answer to that is no. But I like the way that Jim explained how he came up with that list. He was looking at 3 searches and 1 watch list to be able to do that. Glenn, use your Barry White voice, really? All right, everybody. We're going to go to the next stop.
Please.
Oh, stop. Jim doesn't like that. All right, so we're going to stop.
Save it for your next webcast.
Save it for my next webcast. All right. Sorry, Jay. You got outvoted here. My stocks. No. Oh, it would be nice if I moved down the list. There we go. My stocks were DXCM, all right, which is also in the healthcare products. Notice that interesting that the healthcare stocks are moving well. Why? Because these are the companies, whether it's for vaccines, whether it's for PPE, whether it's for a lot of different things, these stocks are rocking and rolling. So DXCM, love the earnings. First off, love the earnings per share. And yes, earnings per share does work, and earnings per share does look at how risky the stock is, and it looks at the consistency and predictability of a company's financial performance. Will this company make money quarter over quarter, year over year? And our earnings is forecasted. That's another part of what makes our earnings a little different. We look at past earnings, current earnings. We're able to forecast earnings out 1 year. So yes, it does work, and that's all you really need to know from the proprietary standpoint, that it works. Pretty much that's it in a nutshell. All right, so now, stock back in February, look at that, pulled back, found a nice level of support sitting at that big red blotch that I cannot see. Bounced off. I bet you CI on this is pretty good too. Look at that rebound. Stocks that have high CI or high comfort index are stocks that are not susceptible to long or lengthy down price declines. And look at how resilient this stock was as it hit that bottom, probably round about the same time that Jim said about that March 23rd time period when the market bottomed, and look how it rebounded. Staying above that 50-day exponential moving average. It tested it, and look how that moving average held. Look at how that moving average held. And then it's moving higher, hitting a new high. A little bit of a pullback today, a little wick. Jesse, are you in here? As Jesse calls that, that's hair. That's hair at the top of the candle. We call it a wick. All right, and it's got a little big wick at the big wick at the top. And that means that there might be a little bit of profit taking on that as well. What is this stock? Can't see it. It's DXCM, Dexcom. All right, so where do you see forecasted earnings? Right here, our earnings per share is forecasted earnings. That is our earnings. All right, so I like the graph. I like the way it rebounded after it hit a bottom. I like that it's hitting a new high over the last year, and I love that earnings is still rising. Thus the reason why I picked that. That's right, Jake. This stuff really works. We'll start. Todd.
Yep, not much to not like here. It's overextended. So I'm sitting on my hands right now waiting for the market anyway. So I might just keep watching this guy, see if it pulls back from the overextension, and then I can buy it on the reignite.
Okay. Jim?
I think it's again, it goes back to the list of stocks that we have, the roster of stocks that we have to choose from. It's going to be hard not to find a good stock, and it looks just like the others. I love it. Again, look at the earnings, look at the comfort index, look at where's relative safety, 1.28, does that say? So relative safety is very strong. Earnings growth rate, 32% earnings growth rate. Yeah.
All right. Patrick? It's great. Good. We'll move on. No.
I agree with Todd. You're waiting anyways for an entry, so see if you can get a better buying price on it. But everything else looks good.
All right. And I think that as we analyze these stocks, I still think that the majority of us are still in that trader's mentality as we do these hot stocks. The mentality is a little different from this panel. This panel is all about, and Jim was right when he looked at the first stock, Cigna. It's a long-term play in a rising industry. That's exactly what you're looking for. All right? So let's go find my other stock. What was this? Newmont, wasn't it? There it is, Newmont. I got a gold play in here. I got a gold play in here as a blue chip bargain. So look at that. Stock went up. And even when gold was getting smacked around like a red-headed stepchild rented mule, the stock was moving a tad bit sideways. Yes, I put some glenosity in here. Doggone right I am. Stock was, you notice how a lot of other gold stocks were getting beaten up here. Newmont just stayed with the pace, just kept going, got above that 50-day exponential moving average. Look at that. As the stock's price was moving sideways, look at the earnings. That was a precursor to probably what was going to happen to the stock's price. And what did it do? Stock's price ran. February happened. COVID-19 happened. Boom. Look how quickly the stock reversed. Where's CI? 1.66. These stocks that are least susceptible to pullbacks, long pullbacks, look how quickly they respond. Folks, you're not going to find that CI indicator anyplace else than in this software. All right, so keeping that in mind, stocks priced nicely above that level of the 50-day exponential moving average. And Todd,
Good job, Glenn.
that's right. Todd and everybody in here is probably going to say the same thing about the stock being overextended.
Au contraire.
Whatever. The stock is kind of way up there. What would you do to maximize or mitigate the losses? I am of the mindset when you're in a good quality stock, if the stock goes down against you about 20%, you probably need to think about if you still want to hold it or not. Do you agree with that, Jim?
Yeah, even 15%. But,
Okay.
yes, but covered calls, protected puts,
There you go.
callers, there's so many ways around it. But yeah, you still have to have a reasonable exit strategy to get out. For these type of stocks, it may be a little more prudent than very tight, but it depends on your objective. Listen, you could day trade any of these stocks. They're all great companies. Yeah, you want to keep a reasonable stop as you would in any stock.
Hey, Glenn.
Yes, Patrick.
Real quick, can you add the green light buyer on there?
The green light
You're
buyer.
going to comment on the same thing I'm going to, I bet. Michael's comment?
Yep.
Yeah.
Yeah, at the bottom.
That's what I
Confirm
just
calls.
wrote down, yeah. I was going to go
Almost
to
there.
a timing graph, but
So he says he thinks we missed the bottom. Can you zoom in to, anywhere around that area? And what date was that first green light? The first day for our most aggressive investors to start getting back into the market.
326.
3 days after the bottom.
Yep.
So
Patrick took it, you beat me
That's
to it. I had it written down. I was going to say.
that's a big miss.
Not only that, Patrick, putting up that 50-day exponential moving average, ideally suited for some of these longer term stocks. Did the stock ever break back below that 50-day moving average, Patrick?
Nope.
Did it? How about earnings during that time period? Did it fall, Patrick?
No?
No,
And when did you
didn't.
start talking about gold and trending Thursdays?
I talk about it for the past month about Gold and Trending Thursdays. Also here on YouTube, 2 o'clock every Thursday. All right.
What's the price of the stock, Glenn?
The price of the stock is $63.
I just going to take 2 seconds
Sure.
because there's another great stock on here on the list that none of us chose, that I almost chose, was Barrick Gold.
There you go, GOLD.
I have it as also as an honorable mention if you wanted to play the miners or gold or silver. So this is a great one, but I like gold. It's about a third of the price right now if you're interested in it.
All right, I'm going to undo the Zoom. Todd.
Yeah, here's why I wasn't worried so much on this one about your overextended price.
Okay.
Because on that igniting candle, that wide-ranging hollow candle,
That one?
yeah, the follow-through after that, see it consolidated for like 5 days after that?
Yep.
The price progression from that has not been parabolic.
It's been steady.
Yeah, it's back to that 45
Okay.
sustainable price level. So you're still feeling the gap from the moving average because of the igniting bar, but the price action has been relatively sedate from that and organized.
Who says igniting bar?
I just did.
Okay, I'm
going to start trying to use it, though.
igniting bar.
Did we just start a book of Toddisms?
I think we just started a book of Toddisms. The igniting
started
bar.
a Toddism.
Oh, that has to be my first one.
That is your first one, Todd. The igniting bar. So, folks,
Chapter 1.
going forward, a big spike in a bar like this, for as Toddisms, is an igniting bar. And you know something? I think it brings to bear a good point.
It, right?
Yeah.
That since that big move up, stock's price was steadily moving up. So Todd is not nearly as concerned about the distance between price and the moving average. And that's a good point. I do like that. I didn't look at it that way, especially looking at the igniting bar. All right. So with that, I'm going to pass the everything over to Todd. He's going to be the next one up. And then I am going to get ready to go because, like I said, I've got another webcast that I've got to do. So Todd, the floor is yours. And afterwards, it will be Patrick's. Folks, it was my pleasure to be here. Have a great day. I'll see many of you on Trending Thursday tomorrow here on YouTube at 2 p.m. Adios, arrivederci, ciao, au revoir, aloha. Bye.
I have control. All right. Todd Schaefer, everybody, manager of research for VectorVest. Probably most in the blogosphere for the Successful Investor course and coaching attached to that. But you'll see me around. So glad to be with you today. My approach, I like to usually kind of tell the backstory of my approach because I think the most helpful things for me have been understanding people's thinking. So when I approached this list in this economic environment, the thing I'm most concerned about is the company's ability to continue to generate income, sales, right? So the first thing I did was I took this list and I sorted it by sales growth, and I made sure that we at least had positive sales growth numbers, right? Look at Jim's pick up at 238% sales growth numbers. Way to go, Jim.
Thank you. Thank you very much.
So from that universe then, I started looking at graphs. And let's just start with my first choice, alphabetically, Chem Med. And let me bounce back over to the graphs. My first pass, if I can find it, because of this price action, I'm looking at a one-year chart, and I'm looking for bottom left, upper right, smoother the better. I just don't have a lot of perspective here. There's a lot of these graph patterns that kind of congest and move sideways through the end of 2019. So I actually opened it up to a 5-year graph instead. Now I'm looking for continuations. Now I'm seeing bottom left, upper right, smooth the better, driven by price and earnings, right? And now this anomaly is in perspective. It also shows me there's some really significant support here at what, about 316, which just happens to coincide with a retest on this most recent pivot, right? So doing multiple time frames can really help you in your analysis of any particular stock. So by the numbers, and I guess I won't go back to the stock viewer just to cook the numbers here to show them, but we've got an earnings growth rate of 15%. This does have a dividend yield of 0.65% and a safety score of 98. And the sales growth on this particular company is at 7%. All right, so they did have an earnings beat. In fact, all of my picks had earnings beats in this most recent earnings season. And you can see just here how the price is coming back to retest the moving average. So let me go back to the one-year graph. We'll get a little bit better time frame here. We're in this consolidation, which we've seen so many times. Our strong support was down at this pivot low, right? But you can see in this consolidation, kind of a carryover from where we were the end of 2019. Boy, I sure would like to see the breakout here, right? But I have enough headroom, particularly if I can break this 50-day moving average resistance. Give me some signs that the market, that this is starting to resume with the market. And I'm far enough away from that resistance level. I can't read the numbers here. 425 versus 460-ish. That I have some headroom, right? If I take the position on, even if I scale into it, before I come back for the retest of resistance, I can start building up a position and still be sensitive to any reversal if this channel holds. Remember, I'm buoyed by being in a company that has strong earnings. Now these guys are in an interesting little place. ChemMed it's a diversified company because it has two main holdings. One is in a palliative care or a hospice care company, and the other holding in Roto-Rooters. So you might see some spin-off opportunities of, I'm guessing, the Roto-Rooter, since the growth seems to be in the Vitas company, which is the hospice care play. All right, but that's my pick here. Just look for that clean entry. Or, to Jim's point, take the entry and then just build the position with some option trades to protect it, and you can do just fine. All right, second pick. Let's go to Humana. It was in that same space, in the healthcare HMO space, which is a top performing sector, so we're loving that. Like Jim's pick, I'm going to go back to the 5-year graph, right? Hard to argue with that. Yes, we swooned here in 2018 to 19, but still uptrend, still intact. Earnings are screaming. Price is actually challenging now the 52-week high. So the price action even a little bit better here as I zoom back into 1 year, right? We're failing the retest though, right? So maybe I'll zoom in. Right. We're testing, but we haven't broken through yet. So particularly if I can see the breakthrough and then resistance becomes support to clean up my entry, on this guy. The sector's doing well. This company is doing well. I'm liking its prospects. And I didn't open it for a discussion, did I?
That's right.
No.
We can go through them. We'll talk afterwards.
Okay. I think that's why you don't want me to be the MC.
Well, yeah.
All right, Teradyne was my next play.
We're getting close to 3 anyway, so.
Yeah, okay. Teradyne is in the instrument scientific space. Again, another earnings beat. Right, so really kind of the semiconductor testing space. So kind of an electronics tie-in, if you will. Price pattern, if I go back to 1 year, again, in this consolidation phase, pick your poison of where you want to set the bottom of this thing to confirm the breakdown, maybe this prior pivot. But with this price action, it's really hard to use any kind of a moving average or the stop price because the price action is just flattened out. The thing that keeps me liking it is that 5-year pattern for both price and earnings. Right, for the numbers on this guy, earnings growth rate of 15% annually. It's paying a dividend yielding 0.65%. Dividend safety is 98. Sales growth at 7%. So I like the underlying numbers and just need the sweetener of seeing the higher high. But again, I've got some headroom here, right? If I can get that price action to go my direction, I have some headroom before I take out the next high or the prior high. All right, Jim, I think that puts you in the hot seat. Anything you wanted to talk about in particular?
No, I can just quickly comment on each of those. First of all, what was it? Humana you were looking at, right? Mm-hmm. Yeah, again, I look at earnings per share. I look at the overall movement of the stock. Even in that pullback, if people forget, right? We forget in this time of the 20-minute news cycle what happened at the end of 2018 into 19. So I can accept that drawdown in any good quality stock, especially these blue chip stocks that are going to move with the market. People forget, we had a 20% sell-off from October to December of 2018. Then, of course, what happened recently? Over time, the relative safety number is at 1.41. The growth rate is, I can't see exactly what it is, but I know it's strong. This is the kind of stock that we're looking for. This
17% on the
17% growth rate. This is the type of blue chip stock that you're looking for. Now, Teradyne is another story. That pattern was choppy as well. We own it, and I actually own the stock myself. We have it in one of our portfolios as a buy right that we've been rolling calls against, trying to get through that drawdown that came through. But I think it's a great stock. Anything with earnings like that, anything with relative safety numbers up in that level are great stocks. So, and same with Kemet, same thing. So I think they're all great picks.
Patrick?
One thing I didn't like with CHE is, I know a lot of guys in here are going to enjoy this one, but the consolidation we're seeing recently, you have the wicked wedge forming, lower highs, higher lows. That makes me a little hesitant to take it right now. I'd wait to see for it to actually show confirmation that it can get out of that consolidation before wanting to jump on board for a longer term pick, because you still have a lot of upside potential if you wait for it to break out. But if you get in now, it breaks the downside, there could be some downside risks that, you could offset it with some options trades, but I'd rather get into a stock that's continuing to start off giving me a little cushion right out of the gate rather than instantly having to be defensive the second you get into the stock.
Right. So you could have a trend line break here, or even if you just use prior this resistance level.
Either one.
Okay.
The Humana, healthcare, it's great. The only thing is, I feel like healthcare just in general as a overall industry or sector even has really taken off due to more news-driven times rather than fundamental, reasons. So I'm a little skeptical of the healthcare sector as a whole, just personally, but chart looks good. You have a nice recovery. I feel like the quick V recovery that you saw with a lot of the healthcare is due to news-driven and could be, eventually that news kind of calms down. You see the pullback. So I'd be a little skeptical on an entry right now, just maybe waiting a little bit, see if you can get a better entry opportunity. When all the people buying it off the momentum play leave it, you buy it for the fundamental play at that point. But
Okay.
then the Terra, I didn't like what I saw at the high from the previous high. That sell-off on that high.
This one?
No, from back in January. You saw it spike up and then come crashing back down that same day. That's usually a sign that people, buyer mentality isn't really there at that price range.
What day is that?
January, let's see,
That's right. January's good enough. That's good.
January 23rd. So tells us that, investors weren't really willing to pay that $80 price tag. Now it's trading at 60. You may see it try to retest that point, so you do have some upside potential, but as a long-term play, I'd be careful around that $80 when investors already show that they aren't necessarily willing to pay that price tag for that stock. But I mean, you have great earnings. As long as they can keep that up, great. But yeah, just makes me a little hesitant when I see something like that.
All right, and I think that means that you are next, Patrick. So
All right.
Pass you the wand here.
Just while Patrick's getting ready, I had a quick comment. I want to come back to Michael's question about, or comment about missing the timing. Just so you know, I ran, the beauty of the type of stocks that we're looking at here, these ruler stocks, I ran some quick tests from the March 23rd low, from a couple of days later when that green light buyer came and the primary trend. I mean, listen, ruler stocks are up 24, well, at least a couple of days ago. They're probably up even higher now. 24% since that low, March 23rd to 26th, somewhere in that range. So again, these are great trading stocks. They're good long-term stocks. When the market begins to move up, again, if I had a hedge fund or a mutual fund, all 36 of these would be in my portfolio. That's the key point to all of this is that lower subgraph, in my opinion. Anyway, sorry, Patrick, I wanted to comment on that before I forget.
Well, that fits into the market narrative too, right? So part
Exactly.
of our concern as investors is what's the other side of this thing look like, right? We just voluntarily shot ourselves in the foot. What's it going to look like on the other side? Well, I'm looking for companies that can still make money and have a history of being able to make money. So those guys should be able to navigate the waters more easily, right? They have cash on hand in many cases, right? They're larger cap companies, so they can be more resilient to the challenges that they face, versus a small cap company that is a one and done if they run into a financial problem.
That's right.
Yep.
So high relative safety.
All
Anyway,
right.
go ahead, Patrick.
So, hey everybody, my name is Patrick France, senior instructor here, specifically leading our mobile platform or the stock advisory app. Every Thursday I hold a live stream on our Facebook page. So if you go to facebook.com/VectorVest7, you can go there, like the page, turn on notifications. That way you get notified every time we go live. But I host a live stream specifically on our mobile application every Thursday at 11 a.m. Eastern. I also do the Jockey Club, do timing the market for a few of our foreign markets. Been here at VectorVest for over 9 years now, so that's a little bit about me. With my picks here today, I took a little bit of a more simplistic, in my opinion, approach. Instead of analyzing numbers and data and all that, I let the graph determine which stocks I was going to get into. With this panel that we did here, Jim found a list of stocks, sent it to us, and told us to pick which ones we like. So I already knew that they're going to all be good stocks to get into, regardless of which one it is. So I wasn't really worried about doing the fundamental analysis on my own because I knew Jim already had that covered for us. So what I did is I took a more old school approach, something that we really haven't talked about a lot here at VectorVest in a while. But it's a methodology or an approach that I talked about that I actually did a presentation for a user group for back in 2012, 2013. And it's called Midas Touch. Now, I know a lot of people think about the Midas Touch as a short-term swing trading strategy, but it really came from originally a more longer-term approach that we used on gold and silver stocks that then got adapted to more long-term holdings as well. It was one of the earlier strategies when I first started working here that I got familiar with. So I used that approach because I've used it myself. It's been time tested. It works time and time again for long-term approaches. So I went to the graphs. I pulled up all 36 of them, and I'll go ahead, go to my layout, or go to my first stock here, ANSS. And what I did is I came up to the graph layouts, chose the Midas Touch, and just simply took off price action. So the original way, or the old way, or the long-term way, if you will, or long-term approach to using the Midas Touch is you're looking at a 10-day and a 65-day moving average of the stock's stop price, and you're looking at a 40-day moving average of the RT. So what you're looking for from a chart basis is the 10-day moving average on the stop price to cross above the 65-day moving average, and you're also looking for the 40-day moving average of RT to cross above 1. When those two situations happen, that gives you a long-term buy opportunity. The first one I came to was ANSS. This is more of my speculative play, if you will, because as you can see, the 40-day moving average on the RT did just cross above 1, but the 10 days still remains below the 65-day moving average on the stop price. So as an entry point, what I'm looking for is that 10-day to cross above the 65-day moving average. When you look at price action, you can see it has some consolidation like we've seen with a lot of other stocks. But it's starting to potentially break out here today, which could see that 10-day moving average go above the 65 in the very near future. So this one is more of the speculative play, not really getting that buy quite yet, but definitely close to it. So that's why it made the list compared to some of the other ones I was looking at. Just to kind of demonstrate this, if you go back, it's taken a while, but the last entry on this one, put on the date line, was somewhere back in here.
I thought it was 3 months. Isn't it 3 months?
Well, that's for the short term. That's for like the Midas Touch stocks and new swing trading. This is from when we used it on gold and silver a long time ago, and then we moved into retirement stocks or long-term stocks. But here is $171 is the closing price the day that you had both occurring. Finally broke down, let's see, right here at 216. So a nice long-term approach. You were in for quite a while, didn't have to really worry about it. 5 minutes at most looking at it at night, you're done with. And if you just waited till the crossover, you got out, still made a nice profit. Didn't really look at any of these to see if they had a dividend. I'm assuming, Jim, most of these pay a dividend?
Actually, many of them don't.
Oh.
The ruler stocks, premier growth stocks, many of those don't pay a dividend.
Well, if this does pay a dividend, it's a nice little bonus.
I mean, it might, yeah. Some
Still
of them
made a
do, yeah.
great trade with minimal effort. Just looking at the graph, you didn't even have to look at price action. Just simply look at it without price. That way it takes the emotion out of it. So this one was my first one that I came across. I know everybody's going to want to look. Earnings per share, nice steady rise as well. This is over a year and 8 months. A year, pulling back a little bit, but overall still rising on the long term. Todd?
Yeah, I love the technique, and I love that that you touched on it, because you're right, we don't talk about it enough. It's a fantastic study and works very well, particularly for volatile issues, right? But here it's just been beautiful. We use a 5-day MA on the RT to sometimes, if you want a little faster signal. Since we're on the slower side, I can see that we're waiting for the crossover, the bearish crossover, and that's just fine. But if you want to ramp it up a little bit, look for the 5 crossing below the 40 on the RT. Not as a sign to sell, but as a sign to tighten stops.
Jim?
Yeah, no, again, listen, it's got all the same patterns. That's the great thing I like about the list that I talked about, is that, you kind of said it, they're all high RS stocks. So they're, I like the idea that no matter which angle you come at this from, most of these stocks are good quality stocks. So, yeah, you can see, again, from the bottom, it's had a nice move to the upside. It's a buy-rated stock. It's great. Yeah.
And also, just to give everybody, or all the viewers out there, a little insight, a lot of the stocks that were in this list haven't broken this pattern yet. So they're still in that long-term buy rating or buy opportunity based off the chart. What I was looking for is stocks that had that pullback, that were resetting that new buy opportunity for people to look at. So that's why I'm looking specifically for ones that are just starting to cross over, just starting to break out now based off this layout, rather than still throwing in ones that are still maintaining this buy signal from this layout. So just want to give everybody, all the viewers out there and you guys, a little insight for what I was looking for.
Good stuff.
So that was my first one. Now my second one, let's see, Logitech. So this one actually has that crossover as of the 24th. So just a few days ago, you had the RT dip below 1, finally just came back above. You had the 10-day moving average on the stop price break down below the 65, and now it's back above. So this one has had both confirmation signals. This one, based off this signal, is a buy. If you look previously, put on price, you can see right back here, you had a $40 entry, got out somewhere right around here. As worst case scenario, 36. So even if you didn't make money with it for that short term, you still only lost $4 a share, which is another great factor on this, is that not only does it give you good buying opportunities, but if worst case scenario, it minimizes your loss quickly as well.
Without making you oversensitive to 2 red candles.
Exactly. And then now you're getting a new buy opportunity. So you minimize your loss on that first run with all that if you didn't get out throughout this point here. And now you're getting a new entry on a new high as well here today too. Earnings moving up nicely. So that was my second one.
Patrick, I'm just curious, change that one to 3 months? I think that one might make the 3-month one as well.
No.
Not quite.
Close. Pretty close. I was just curious because it looked like it's had a nice move. Boy, I think it did. I think it had it. Anyway, yeah, another good stock. Another good quality stock.
This is a good example. If you look at that price action, particularly on the left side where it's a little cleaner, and you have gappy price action like that, this study does a nice job of letting you chill out a little bit, right? Where you don't have to react because the thing gapped against you today.
Yeah.
So particularly for those, I talked to a lot of people who are price sensitive. This can help with your discipline of just take the price off the graph.
Yeah. Remove the emotion. A lot of people see that price action moving around so much and they tend to get more emotional.
Yep.
All right, good job.
So those are my two. But yeah, I'll have to figure out the date that we talked about in the strategy of the week because it was back all the way in 2012. I know that. I have to go back and figure out which one it was. Maybe long-term winners or one of those. Long-term winners 2 maybe.
Yeah, I don't remember because I've done one too. I had a guy who wanted to do a custom search. So there's several in the university. You have to do a little research. I can't think of them off the top of my head. But Jim, you gonna bring us home?
Yeah, I'll steal that back from you, Patrick.
Sure.
Good job. Let's see. One thing I said I was going to do, I'm going to close or minimize the graphs real quick. I told our friend and colleague, Mr. Steve Chappell, that he had some other webcasts and things, but one of his choices, as you guys know who come to the panel and show up for the panel, that end phase, he wanted to be clear, up another 8 points today. The stock has been on a roll. And we were chatting earlier today, and he said, make sure, I told him I would comment. If Steve were here, that would be his top stock.
That hit my list, but I thought I couldn't do it because Steve kind of owns it.
Yeah,
that is Steve's stock.
It is Steve's stock, so I had to throw that out there to you real quick. Also, one other quick thing I wanted to do. Somebody was asked, actually more than one person, that's why I want to show it real quick. Someone was asking, what is a ruler stock? And ruler stocks are, I'll show you. It's in the prudent folder. It was the first strategy of the week I ever did when I first started here at VectorVest. I'd give you the date, but I went back and listened to it, and it wasn't very good. I've done several since. But a ruler stock, it's simple. A ruler stock, to make the list, has to have 1.4 relative safety number and at least a 14% earnings growth rate. So here's why they're called ruler stocks, just real quick, again, because I saw it come up a couple times. They're called ruler stocks because when you put it on a regular graph layout, and you've got earnings per share down on the bottom, it comes from the idea that you can lay a ruler on top of the graph and just connect those points, whether it's on the stock price movement. For our purposes, it's on the earnings per share over a period of time, and you get that straight line moving up. That's what all of these stocks have in common, is that northeasterly direction on earnings per share. So that's what a ruler stock is. That's what it comes from, the idea of lay a ruler, draw a straight line right up the ladder there. So that's where ruler stocks come from. So I saw that come up a few times. I wanted to straighten that out. Of course, always remember, before you get into any of these stocks, please heed the color guard. Make sure whatever your objective, whatever your investment type is, that signal is in your favor. Whether it is a green light, a primary trend, or a confirmed call, just make sure you're comfortable with the underlying movement of the market. I think my colleagues would agree with me on that. Whatever your investment style is, be sure your bias is confirmed here. With that, I have big shoes to fill. I'm going to try to fill Glenn's shoes here and wrap this up for us. I've got a list of the stuff he goes through. I will do it a little faster than Glenn usually does. Joey, how do I bring up that?
Chrome,
go to the bottom. Chrome.
Don't forget, you got to say bye in every single language you know. At the very end.
I only know English, Italian says. See you later and forget about it. Where do I want to go, Joe? Right here? So here's a trial offer. If you are new to VectorVest, if you're not a VectorVest subscriber, we've got a trial offer here. It's 99 cents for 30 days. Risk-free, give it a try. It's only 99 cents. What you get with that is what we have now are group coaching, getting started, we call it, getting started group coaching, every Monday at noon and Wednesday at 3 p.m. Glenn himself will walk you through what's called a getting started group coaching session to get you to hit the ground running. You get model portfolios powered by exclusive automated trading systems. Again, this is for those who don't have VectorVest currently. You get unlimited world-class analysis of over 19,000 stocks and ETFs worldwide. Accurate market timing and signal guidance that we've talked about here today. And we also have a Trending Thursday and Facebook Live session, I believe that Glenn does as well, right? The Trending Thursday is Glenn.
It's all about Glenn.
Yeah, it's all Glenn is the man.
Well, Thursdays, hey, I do the Facebook Live, and if you want, Jim, what I can do is I was actually going to talk about more of a retirement-minded and the mobile for tomorrow. I can have this list of 36 stocks. If people want to tune in tomorrow, they can get it in the chat there.
Yeah, great.
A
few people asked for that, yeah.
Yeah, so if you guys want the list, make sure to tune in at 11 a.m. Eastern tomorrow on Facebook Live as we go live doing a stock advisory app session, and I'll have the list for everybody there as well. So tune in tomorrow.
Yeah, that's great. And the one thing I want to say about the list, by the way, I took 3 searches and a watch list. There are other good ones. These are the ones I chose. So as you're navigating through VectorVest, there are other really good searches. I use worry-free winners, ruler stocks, premier growth stocks. There are others. Go into the conservative, the prudent folder, the retirement folder. Take some time, go through some of the searches. Heck, you can even create your own. So then finally, I wanted to just, which one was next? That one there. I alluded to earlier the Tuesday retirement coaching group. This is a coaching group I get to host every Tuesday afternoon, 2 o'clock Eastern. We do weekly trades and training. We have a dedicated email bin, a dedicated membership site with resource videos, and we walk through a covered call income trade every week, assuming the market trend is in our favor. You can go to, what's the website, Joe? It's
VectorVest.com and then
join our RGC. Yes, so it's VectorVest.com/join RCG, or the Retirement Coaching Group. And that'll take you to this page here, and just something to throw out there. Covered calls have been doing great. The ability to know when to identify strategic times to be protective of your retirement nest egg, protect your net worth, understanding put spreads or protective puts or collar trades. It's gotten us through this sell-off that we've had since late February. in a wonderful fashion, cutting in half the drawdown that we saw. And all that means is that you're protecting your net worth, not losing 30 or 40% of your portfolio and needing that portfolio to grow by 60 or 70% just to get back to even. That's not what we want in our retirement portfolios. We'll help you do that in the coaching group. And then finally, I am told to be sure to tell everyone that if you're not subscribed to the YouTube channel here, subscribe.
Like, comment, and share. Subscribe to the channel, and share it with all your friends.
Yeah, he knows more about the YouTube stuff
Yeah.
what to do. Just do whatever you got to click to share it or subscribe to it. Do that. I'm going old
Joey.
cop mode here. I'm telling you what to do at this point.
Joey,
Is that it? What else we got to talk about? Did I
you
miss
type
that?
in vector or facebook.com/VectorVest7/live.
you gotta get on that. Facebook.com.
/VectorVest7
Joey's going to type in a link for you guys to get to his Facebook Live tomorrow.
/live.
Somebody's asking where the mug is.
Seven.
Someone
VectorVest
typed in
7
earlier, Glenn better clean the mug before he sends it out.
/live.
It's not that one.
Yeah, Glenn took the mug, yeah. It's not that exact one. I think somebody won it. I missed it, Joe. I'm not sure who won the mug.
Yeah, I missed it too. But somebody did one.
Okay.
Eric?
All right, well, real quick, someone asked, it would sure be good to get the watch list for panel meets. Well, it's hard to get it out to you prior to the meeting or to the session, but just know you can easily set up that watch list. Go to those searches. Ruler stocks, premier growth stocks, worry-free winners, no moving average. And then in the watch list viewer, I just took the top from the blue chip bargains. There's actually a search in the prudent folder called biggest bargains. And one of the parameters is it has to be on the blue chip bargains watch list. So you can take the top 10 and throw them all into a watch list. It's easy to do. So I urge you to do it. Find some of the other searches and add to it.
And if you don't want to, tune in tomorrow at 11 a.m. Eastern. Get the list there on Facebook Live. Click on the link in the comments there.
All right.
There we go.
All right, folks. Once again, thanks for taking the time. Please, everyone, stay safe, stay healthy. On behalf of my colleagues, thank you so much for taking the time, and we will see you next time. Thanks, everyone.